Most people thought the Hormuz crisis would expose weakness. What it actually exposed was hidden leverage. That is the story I want to tell. When the Strait of Hormuz effectively shut down, the instinctive assumption was simple. The global economy was about to slam into a wall. 150 tankers were stranded. Roughly 20% of the world's daily oil supply was suddenly trapped behind a war. Risk choke point. Prices surged, headlines spiraled, manufacturing powers across Asia started staring at the possibility of a fuel shock large enough to cut directly into industrial output. All of that was real. But the deeper story was not just disruption, it was rerouting. And the country that benefited most from that rerouting was not in the Middle East, not in Europe, and not in Russia. It was Canada. That sounds surprising, only if you are still thinking about energy the old way. The old way says the winners are the closest producers. The new reality is harsher. In a world where choke points can become war zones overnight, the winner is often the producer whose barrels can still travel without crossing a battlefield. That is why Canada mattered so much. Look at what Asian buyers actually needed in the middle of this crisis. They needed real supply. They needed it fast. They needed it at a competitive price. And above all, they needed it to move along a route that did not require gambling on Hormuz. That is where Canada suddenly became strategically priceless. Official data released this week showed that Canada's refined petroleum sector posted its highest production year on record in 2025, while crude output averaged 5.3 million barrels per Dalton Y. Those numbers are impressive in normal times. In a crisis, they become geopolitical facts because capacity is only meaningful if it can be delivered. That is why the Trans Mountain system matters so much. For years, people argued over that pipeline as though it were just another Canadian political headache. Environmental fights, federal, provincial fights, cost overruns, culture war fights, all of that was real. But those arguments obscured the larger strategic meaning. The larger meaning is now visible to everyone. Canada has a secure Pacific route. Route bypasses the Middle East. It bypasses Hormuz. It bypasses the Red Sea. It bypasses the great choke points that turned the global energy system into a panic machine. And because it bypasses them, it suddenly becomes more valuable than many barrels that are geographically closer but politically trapped. This is why Chinese buyers became the pipeline's biggest customers. This is why South Korean refiners moved quickly. This is why the whole North Pacific route suddenly looks less like a long-distance inconvenience and more like a strategic asset. The route is long, that is true, but long is not the same as insecure. In moments like this, secure beats short. That is the lesson. The world did not just learn that Canada can produce more, it learned that Canada can move. That difference matters. Now, look south. This is where the story becomes even more interesting. For years, the general assumption in Washington trade politics was that Canada needed the United States much more than the United States needed Canada. That assumption still contains a lot of truth in the abstract. The American market is larger. The American economy is larger. The American political system usually assumes structural leverage. But physical markets do not always obey political ego. American refineries on the Gulf Coast are built to process heavy crude. They have long relied on some mix of Canada, the Middle East, and Venezuela, with Hormuz unstable and Venezuelan supply unreliable. Those refiners now face a much harder question. What happens when Canada, the most secure source available, also has an increasingly attractive direct route to Asia? That is where leverage changes. Canada is no longer just a neighboring supplier hoping to preserve access. Canada is a state holding a stream of real barrels that both the U.S. Gulf Coast and Asian buyers actively want at the same time. That is a different negotiating position, and that is why the timing is so important. Trade talks are coming, pipeline proposals are coming. The Prairie Connector proposal could move another roughly 450,000 barrels a day south if it is approved. That is not just infrastructure, that is bargaining power. Canada can now negotiate in the language of physical scarcity, not just tariffs, principles, and diplomatic goodwill barrels. That is what changes the psychology. Now move one layer deeper into the domestic side. This is the part many geopolitical analyses ignore, and they should not. When a sector this large breaks production and export records in the middle of a global shock, the effects do not stay in corporate earnings statements. Pension funds improve, provincial royalty revenues rise, budget pressure eases, infrastructure becomes easier to fund, even political room for something like a fuel tax cut becomes easier to create. In other words, external leverage can become internal stability. That is not a small thing. And it helps explain why this moment feels different inside Canada than many previous energy booms did. This is not just a price spike. It is a proof of concept. It is proof that the infrastructure built amid years of argument is now doing exactly what strategic infrastructure is supposed to do. It is absorbing shock. It is creating options. It is generating leverage. It is making the country harder to squeeze. That is the upside. But now we have to say the harder part. This advantage is real. It is also temporary unless Canada locks it in. That is the structural challenge. Middle Eastern routes will not remain disrupted forever when they normalize. Some buyers will naturally drift back to the geographically closer suppliers they relied on before. The West Coast pipeline system also has hard limits. There is only so much capacity to move. There is only so much room to scale quickly. That means the current moment is a window, and windows close. If Canada wants this crisis to become a durable strategic gain instead of a temporary windfall, it has to use this period to lock in long-term contracts, deepen relationships with Asian buyers, and expand the sense that Canada is not just a fallback barrel, but a permanent strategic option that is the real opportunity. And it is also where the climate contradiction becomes impossible to ignore, because record production creates immediate wealth and immediate leverage, but it also collides directly with long-term emissions targets, carbon pricing fights, and the domestic question of whether a country can expand hydrocarbon power while still claiming climate seriousness. That contradiction will not disappear. Success may actually make it sharper. The more useful Canada's oil infrastructure becomes to the world, the harder it is to pretend the country can escape the trade-offs simply by speaking in cleaner language. This is what statecraft actually looks like. You do not get leverage without tension. You do not get resilience without trade-offs. You do not get strategic advantage without friction somewhere else in the system. And that is why I think this whole episode matters beyond oil. It tells us something larger about the world economy. Now emerging, the real globalization story assumed that efficiency would dominate everything. The shortest route, the cheapest route, the most optimized route would always win. The new story is different. The secure route wins. The resilient route wins. The route that still works when the old system breaks wins. That is the world we are moving into. And Canada is one of the clearest examples of that shift for years. Pipeline infrastructure was treated by many people as politically embarrassing, environmentally toxic, or strategically outdated. Now, one of those same systems is helping redraw the map of trans-Pacific energy trade. That is not a side note. That is history moving through steel. And if you want the whole story compressed into one line, it is this. When Hormuz stopped looking like a highway and started looking like a trap, Canada stopped looking like a backup supplier and started looking like hidden leverage the world suddenly needed.